The market's overhanging fear of a looming global recession reared its ugly heads this week when FedEx came out to report its earnings. News hint, if you haven't seen it already, it was a disaster of a report. They are guiding down. We'll go through that a little bit later, but more importantly, we'll listen to the words of the CEO when he was on Jim Cramer's show discussing the fact that a global recession is a possibility. We'll also be discussing an article that I found in the World Bank discussing some of the same concerns they have, but a potential solution to save the global economy. But if this is your first time here, my name's Nick. Welcome to Ways to Wealth. Before we get into the video, a huge favor, a huge ask. If you learn something new or you get some value out of the video, hit that like button for me. I definitely appreciate that. And if you haven't already, please consider hitting that subscribe button and turning that notification bell on for similar content just like this. We release a new video every single Sunday, so make sure to stop by the channel and come check out what we are talking about. We're going to start off by giving you some of the verbal cues that was presented by the FedEx CEO, especially in the fact that FedEx actually released their earnings 1 week prior to when they were expected, to kind of let the market know everything that's going on from a parcel standpoint. And we'll talk about why that's important shortly. We are seeing that the volume decline in every segment around the world, and so we just started our second quarter. The weekly numbers are not looking so good. So we just we just assume at this point that the economic conditions are not going to be good. But it basically allows us then to fully go into cost management mode and take those actions that we can then restructure FedEx in a different way.
Raj, are we going to a worldwide recession?
Well, I'm not an economist, but
you know more than economists. Come on, they don't. They just push papers. You actually look at papers.
Well, I think so.
You think we are going to a worldwide recession?
I think so. But again, these numbers don't portend very well.
U.S. in the last few weeks as bad as China in the last few weeks.
Yeah, the U.S. Consumer has definitely spending less, but the U.S. has been somewhat insulated because the U.S. dollar is the currency of choice for the world, and there's some insulation there. But I do see the U.S. is slowing down too. Now, I'm sure it doesn't surprise you after these comments were made and this earnings report was released and the guidance down. FedEx had its biggest one-day drop in share price, bigger than the 08-09 crisis, many other crises throughout history. It was definitely something that the whole market was watching, and it led to fear. Let's take a little bit of a deeper look at the CNBC article to see why FedEx is almost like a pulse in the market. And one of the points that we read out here is that we are a reflection of everybody else's business, especially in the high value economy of the world. That's because people are shipping things around. It gives you an indication of e-commerce, retail spend. How is the consumer doing? Are they doing well? Well, at the end of the video, we saw that the CEO pointed out the American consumer is still strong because the US dollar is strong, but just how long is this going to last? Obviously, weakness throughout the world. China, second biggest market. I think what's more important is just to see the magnitude of how much they missed. So we can see down here that the earnings per share was $3.44, and it was expected by the analysts that it was going to come in at $5.14. Now, the revenue wasn't too bad, just a short miss there, but I think the earnings per share was the biggest focus. The second biggest focus is that they guided down for next year. They definitely don't anticipate to make as much money as they had before. It is definitely a good idea to take a look at what is happening on FedEx on a grand scale, but we can even look at it from a different perspective, more on what the central banks are doing. So we're going to go to an article that I found from the World Bank, providing a little bit of research as to what's happening from economies throughout the world. So we see in this article here, the risk of global recession in 2023 rises amid simultaneous rate hikes. So central banks around the world have been raising rates. So you probably feel it in the country that you're in, Canada, US, Europe, etc. And this degree of synchronicity has not been seen over the past 5 decades. We've never really raised rates consistently amongst ourselves. It's always been little pockets of the world that raise rates, lower rates. Obviously, China is lowering their rates right now, printing a lot of money. And this trend is likely to continue, especially with inflation numbers rolling rampant. So investors expect central banks to raise global monetary policy to 4% through the end of 2023. In Canada, here we are almost there, and that's an increase of more than 2 percentage points over their past 2021 average. So we're raising the rates, and we're raising them fast. Now, obviously, there has been multiple targets as to why inflation has reared its ugly head, whether that's the supply chain disruptions, etc., etc. Let's leave that aside for now and look at what the president of the World Bank has to say. So global growth is slowing sharply, with further slowing likely as more countries fall into recession. My deep concern is that these trends will persist, with long-lasting consequences that are devastating for people in emerging markets and developing economies. To achieve low inflation rates, currency stability, and faster growth, policymakers could shift their focus from reducing consumption to boosting production. Policies should seek to generate additional investment and improve productivity and capital allocation, which are critical for growth and poverty reduction. So he's looking at it from a global scale, looking at it from not only the wealthier countries, but also developing countries and low economics that have to deal with the higher US dollar and higher cost of goods, even more than we would here in North America. So what is the solution? They did a study. They looked through the past to see, is there any time periods in which we've experienced these similar types of growth or lack of growth and high inflation? 70s, of course. So they looked at the policy responses from 1975, the global recession there, the period of stagflation, the global recession of 1982. And what they found out is that 1982 actually coincided with the second lowest growth rate in developing economies over the past 5 decades, second only to 2020. It triggered more than 40 debt crisis and was followed by a decade of lost growth. So how can you get around this? How can you evade this? Well, we hear from another member of the World Bank, and they said that actually it's probably not best to try and tighten where we raise the interest rates and we stop printing money. We should actually continue to print a little bit in order to keep the economy stimulated, and hopefully the economy catches up to the inflation rate and eventually it works itself out. Now, how will they do that? The central banks must communicate the policy decisions clearly while safeguarding their independence. So basically letting the people know what their plan is. And I think on the Canadian side, they've been pretty evident that they're going to continue to raise rates until inflation comes down. But there is different sectors or different areas of the economy or different countries that may differ. Fiscal authorities will need to carefully calibrate the withdrawal of fiscal support measures while ensuring the consistency with monetary policy objections. So just making sure that they are not going to overshoot, they're going to hit those soft landings. I'm not sure personally if this one is already passed and not going to be achievable. Other economic policy makers. Okay, so easing labor market constraints. Policy measures need to help increase the labor force participation and reduce price pressures. Labor market policies can facilitate the reallocation of displaced workers. What these governments are touting now is that labor force is great. Employment numbers are low. I think we're changing this trend. This will definitely be a huge focus point moving forward. So boosting the supply of global commodities. So global coordination can go a long way in increasing food and energy supply. A lot of the oil companies have been reluctant to produce more oil because they've received lack of investment from governments for so long that, they kind of don't see the point. They would rather just reap in all the benefits of a high oil price. Nutrien is definitely benefiting on the wheat side for the food. But if we want to help this out, then, the government should step in and help create more of these to bring price pressures down. And then strengthening global trade networks. So policymakers should cooperate to alleviate global supply chain bottlenecks. I think right now this is naturally working its way out of the economy. There has been a lack of demand for buying stuff from China. We saw that in FedEx's report. One of the other things that is coming into play is that as those supply chain bottlenecks, filter its way out of the economy, I'm not sure if it's going to do as much on the price pressure than what the commodity prices are doing. So that is definitely something to watch, is how long energy stays high, because I think that inflation will be sticky at that point, even, oil, energy, natural gas, uranium, etc. So the other thing that I just wanted to point out is that FedEx is definitely indicative of the consumer. It's telling you what the consumer is doing, how the global economy is doing on a big scale. But remember, we've been sitting at home for 2 years. We've been buying everything on Amazon. I don't know how much more things there is to actually buy. Is FedEx really just a small sample size, or not a small sample size, but just a sample of what the retail economy is doing? More importantly, should we watch what the service economy is doing, travel, restaurants, etc.? Is that really the focus point, and maybe an area of the market that could go into a bull market? Well, that's definitely something to be watched for, but I definitely think on the retail side, things do not look well. I definitely think we are almost in a global recession, not technically by any means, but it definitely does not look good out there. Let me know what your thoughts are down below. Is the world going into a recession altogether? And with these Federal Reserves kind of going opposite, whereas they're tightening the policy, whereas we should be loosening it a little bit, do you see any policy change happening in 2023? Let me know your thoughts down below. If you're still here with me, I appreciate your support. We do a new video like this every single Sunday, so make sure to come by and check it out. I appreciate your support all again. Have a great week on the markets. Happy trading.